Good evening, parents and children. Today's section is exclusively for all 11th standard students. So today what I am going to take. So once again we are revising what you mean by accounting and what you mean by bookkeeping and what is the difference between bookkeeping and accountancy, and also rules for debit and credit, and also we are going to discuss journal, ledger, posting, balancing, trial balance, and how to make a trial balance, and what are the different subdivision of journal, especially purchase book, sales book, purchase returns, sales returns, and bill receivable, bills payable, cash book, and journal proper. These are the things what we are going to discuss today. Now all of you please listen once again. So today, first we are going to discuss what do you mean by accounting. You know, we are already studied what you mean by accounting and what is the rule for debit and credit for accounts. You know that what do you mean by an account. You can see here what do you mean by an account. An account is a summarized record of transactions affecting a person or a firm, income and expense, gain or losses. So once again, what do you mean by an account? An account is a summarized record of transactions affecting a person or a firm, income, expense, gain or losses, and that is what is called an account. And also you can see an accounts may be broadly classified into different groups. There you can see as per modern concept and as per traditional concept. So that is the main point. You know that what do you mean by account, and again we are going to discuss. So what do you mean by as per traditional concept? So what do you mean by account and what are the different type of accounts are there, and also according to modern concept. So what do you mean by account and what are the different type of accounts? Now you know that firstly I am going to discuss. So what do you mean by accounts as per our traditional concept? You can see, all of you please look at the monitor. An accounts a traditional concept, and accounts may be broadly classified into important two sections. That is number one, personal account, and number two, impersonal accounts. You know, I already explained. So what do you mean by accounts? An account is a summarized record of transactions affecting a person or a firm, income, expense, gain or losses. So that is what is called an account. You can see that the traditional concept is there and modern concept is there. And as per traditional concept, an accounts may be broadly classified into important two groups, that is personal accounts and impersonal accounts. And also you can see what do you mean by personal accounts. And these personal accounts again they are dividing to three categories. The same is all related to personal account, but they are dividing into three sections. That is what is called a natural account, an artificial account and representative accounts. You can see in the monitor, accounts may be broadly classified into important two groups. That is as per our traditional concept. You can see that personal account is there and impersonal accounts are there. And again you can see the personal accounts may be divided into three groups, that is natural accounts and artificial accounts and representative accounts. So here you just tell me what do you mean by personal accounts, or otherwise what do you mean by natural personal accounts. Natural personal accounts means, or personal accounts are those accounts which is related to person and firm, but here natural personal account means exclusively we are giving more importance to natural person, that means human beings. Example, Rama's account or Raja's account, or see, so you can see that Rama's account or Raja's account or any personal account, you can see any human beings, that is what is called the natural accounts. The personal accounts are those accounts which is related to person or firm. So here what I am going to express, what is natural personal accounts. So here I am going to discuss, that is natural accounts means, so it is belongs to persons only. That means Raja's account, Rama's account, Sita's account, Vishnu's account, Thomas' account, and whatever it is. So we are giving importance to person. So that type of accounts are known as natural accounts. Then you can see the person account. The second category is artificial accounts. So here also the students have a lot of doubts. So what do you mean by artificial accounts? Artificial account means, so in the name of a company or name of a body corporate or name of an association or name of a cooperative society, this type of accounts are known as artificial personal accounts. See, look at the monitor once again. So what do you mean by artificial personal accounts? The name of a company or a body corporate. You know that what do you mean by joint stock company? That all we have studied in the same classes. The company is an artificial person created by law, having a separate entity apart from its members, perpetual succession and common seal. That means it's an artificial company. And also you can see cooperative organization is there, like body corporates are there. That means artificial, the name of a company or a cooperative society or an association or any charitable society, so whatever it is, there we can see that this is what is called personal artificial accounts. Now you can see the last one, that is representative personal accounts. So what do you mean by representative personal accounts? That means this is on behalf of the persons we are supposed to pay the money. See example, then I will give one example, then you can understand. Salary due to landlord or salary outstanding. See example for representative account is salary outstanding, salary outstanding. So that is what is called a representative account. That means which belongs to a person. So that type of accounts are known as representative account. Salary outstanding, accrued interest, or commission received in advance, so whatever it is, you can say that it is a representative account which is belongs to some person or which is belongs to a firm, whatever it is. So you can see representative account. So listen, I think now it is clear. Accounts means, or what is an account? An account is a summarized record of account is a summarized record of a transaction affecting a person, firm, income, expense, gain or losses. And out of that you can see accounts are broadly classified into important two groups, that is personal accounts and impersonal accounts. And personal accounts may be divided into three groups, that is what is called natural account, artificial account and representative accounts. And here you can see natural means the name of a person. So Raja's account, Rama's account, Sita's account, any person. So here it is represented a person. That type of accounts are known as natural accounts. And see, look at the second point, artificial account. So that is the name of a company or name of a body corporate or name of a cooperative society or name of an association. That type of accounts are known as artificial accounts. Then third point, you know, the students have a lot of doubts here. What is representative accounts? Here you can see last year Sahodaya examination, the board is asking question, give two examples for representative accounts. The representative accounts mean salary outstanding or accrued interest or like a prepaid, so the amount which is paid in advance, so whatever it is. So this kind of accounts is known as, you know, that is representative accounts. So representative accounts, you can see the example is salary paid, accrued interest, etc., etc., which is belongs to a person. That is why we are using the word is representative account. So then next part you can see impersonal accounts. So out of the impersonal accounts, the point is real account and nominal accounts. See, look at the monitor. So what do you mean by real accounts? The real accounts are those accounts which is related to properties and possessions. The examination normally they are asking, give three examples for real accounts and give three examples for nominal accounts. So look at the monitor. So real accounts. So what do you mean by real account? Real accounts are those accounts which is related to properties and possessions. Example, you can see land and building. Land and building. So plant and machinery. Plant and machinery. See, land and building, plant and machinery, and also bills receivable. So bills receivable and also cash account. These are known as, these are example for real account. Real accounts are those accounts which is related to properties and possessions. Example, land and building, plant and machinery, bill receivable, cash account, etc., etc. Then last point you can see nominal accounts. You can see that the major part of our transactions are belongs to nominal accounts. That means the revenue and expenses are there. Lot of revenues are there, a lot of nominal accounts like expenses are there. Example, nominal accounts are those accounts which is related to income and expenses, gain or losses. Once again, nominal accounts are those accounts which is related to income and expenses or gain or losses. That type of accounts are known as nominal accounts. Example, you can see very common example, that is salary paid and rent paid, electricity paid, commission paid, brokerage paid, banking charges paid, legal charges paid, that all expenses. Then also you can see revenue, the revenue in the form of commission received or rent received or interest received or interest on investment. Example, these are the examples for nominal accounts. So once again, nominal accounts are those accounts which is related to income and expenses or gain or losses. And as example for nominal account is salary paid, rent paid, and revenue items, that is income received, commission received, brokerage received, or whatever the income we are getting, that is what is called a nominal account. So I think now it is clear from the monitor itself. You are getting all the points. You are getting a clear picture about our accounting system. We are already studying what you mean by accounts, and accounting, you know that we are considering the money which we can measure in the item which we can measure in the terms of money. Only those items we are recording in the books of accounts. The professional, the qualification or professional efficiency we are not considering. Maybe it is the limitations of accounting also that we are studied in first chapter. And here you know that the item which we can measured in the terms of money, only those items we are recording in the books of accounts. So once again, you know that accounts may be divided into two, that is personal account and impersonal account. And even personal accounts, you can see three categories are there, that is natural account, artificial account, representative account. Then again second right hand side you can see impersonal account. So there we are seeing the real account and nominal accounts. You can see this is the traditional concept of accounts. So what is accounts and what is the traditional concept for accounts? Now you look at the monitor. This is a very, very important. Nowadays we are applying the modern concept. You can see from the monitor modern classification of rules for debit and credit. And also what is the modern classifications? The accounts, you can see that they are divided into different groups like assets accounts, liability account, and capital account, and expense account, and also revenue account. These are the, you can see 5 sections, you can see that. So assets accounts are there, and liability accounts are there, and capital accounts are there, and expenses are there, and revenue accounts are there. These are the modern concept. So once again, all of you look at the monitor, see asset account, liability account, and capital account, and expense account, and revenue account. This is what is called the modern concept of accounting. Then we can see one by one what is the rule of debit and credit for assets, and what is the rule and rules for debit and credit for liabilities, and capital and expense and revenue. So once again, what is the rule for debit and credit for liabilities and capital and expenses and revenue? So point is like this: if the assets are increasing, you can look at the monitor. If the assets are increasing, the rules for debit and credit, we are studying double entry system. Every debit there should be a corresponding credit. That is the system, that is a scientific system we are proving with the help of accountancy principle as per our accounting standards. As per our accounting standard, now we are proving that, see, assets, if the assets are increasing, we are debiting. The assets are increasing, we are debiting, and if the assets are decreasing, we are crediting. So rules for debit and credit for asset accounts, see, all of you please note this point. So here, if the assets are increasing, so we are putting into the debit side, and if the assets are decreasing, we are putting in the credit side. So second point, if the liabilities are increasing, we are putting in the if the liabilities are increasing, we are putting in the credit side, and if the liabilities are decreasing, we are putting in the debit side. So once again, so asset account is there and liability accounts are there, and capital account is there, expense account is there, revenue accounts are there. Now I am discussing about what is the rules for debit and credit for asset account and liability account. If the assets are increasing, we are putting in the debit side, and if the assets are decreasing, we are putting in the credit side. I think all are getting my points. So we are discussing the rules for debit and credit. If the assets are increasing, we are putting in the debit side, and if the assets are decreasing, we are putting in the credit side. Then look at the second point, if the liabilities are increasing. So many examples are there. Example, creditors are increasing, capital is increasing, where we are putting. If the liabilities are increasing, we are putting in the credit side, and if the liabilities are decreasing, we are putting in the debit side. So 2 points are over. And third point, you can see capital. That is a very important thing, because commence in a business with a capital. The businessman is starting the business with a capital, or commence in a business with a cash in the form of a capital. So capital is a liability to the businessman. So that is why we are using the word is the capital. If the capital is increasing, we are putting in the credit side, and if the capital is decreasing, we are putting in the debit side. See, now three term rules for debit and credit we have studied. The first one asset, and second one liability, and third one capital, and fourth one you can see expenses. Example, salary is increased, where we are putting the debit side or a credit side? Answer is very simple. Look at the monitor. If the expenses are increasing, we are putting in the debit side, and also vice versa. If the expenses are decreasing, we are putting in the credit side. And the last point, look at the monitor. If the revenue, income is increasing, we are putting in the credit side, and the income is decreasing, we are putting in the debit side. So these are the modern concept, and on the basis of that, now we are journalize the books of accounts. That is a system for journalizing the books of account. That is a modern concept. And once again, the modern concept is asset account is there, and liability account is there, and capital account is there, and expense accounts are there, and revenue accounts are there. So these are the main modern concept of accountings for rules for debit and credit. And once again, so what is the rule for debit and credit for traditional account? That also we supposed to discuss. You know that what I had given, that is the modern concept. Then you know that the traditional concept, there are three type of accounts are there. That is a personal account, and a real account, and nominal account. Then again you tell me what is the rule for debit and credit for personal accounts, and what is the rule for real account, and what is the rule for nominal account. You know that I have already explained. So what do you mean by personal account? Personal accounts are those accounts which is related to person and firm. So person, any person's name. So example I already given. So personal accounts are those accounts which is related to person and firm. And the second point, you know that real account. The real accounts are those accounts which is related to properties and possessions. And nominal accounts are those accounts which is related to expenses and gains and income and losses. Now look at the principles of personal account for debit and credit, and real account and nominal account. See once again, personal account rule for debit and credit is debit to the receiver and credit to the giver. So listen, this is a very important for your examination. What is the rule for debit and credit for personal account? Either you can choose, or you can take a traditional concept, or you can take a modern concept. So that means which one is very easy, that you can understand while we are doing the problem. You can understand, and also I will explain. So here a lot of examples are there. So look at once again. So what is personal account? Personal accounts are those accounts which is related to person and firm. So then what is the rule for debit and credit for personal account? See, answer is very simple. Debit to the receiver and credit to the giver. So once again, debit to the receiver and credit to the giver. That is the rule for personal accounts. Then what is the rule for nominal real account? So debit to what comes in and credit to what goes out. So debit to what comes in and credit to what goes out. So that is the rule for real account as per our traditional concept. The last point, what is the rule for nominal account? Debit all expenses and credit all gains. So debit all expenses and credit all gains. That is the rule for nominal accounts. Now listen, you are getting a clear picture about traditional concept as well as the modern concept. The traditional concept as well as the modern concept, the rules for debit and credit. So once again, so now what all things we have studied? What do you mean by account? The first point what we have studied is what do you mean by account? You know that now our examination is coming. The first time examination is commencing from second week of this month. See, all of you please study. I think more than 6 chapters are there from this part. So first part fundamental is there, and also accounting equations are there, and subdivision of journal is there, especially cash book is there, purchase book is there, journal, journalizing, posting, ledger account, balancing, trial balance, this part is there. That is why today's my class is very important to the students who are appearing for first term examination. So look at once again what we are studying now. What is accounts? So what do you mean by, I am not asking the definition of accountancy or accounting system. Now what is accounts? We are always using the word, you know that, furniture account, building account, and also bill receivable account, cash account, bank account, salary account, rent account, wages account, advertisement account. So then you tell me, what do you mean by these accounts? Account is belongs to what? Accounts is a ledger, or accounts is a you know that is a journal part. What is accounts? The accounts means an account is a summarized record of transactions. You know that we are already studied what is transaction. Transaction means any action of a businessman involving the transfer of money or money's worth from one person to another person. That is what is called transactions. And those transactions we are recording in the form of an account. That is what is called an accounts. You can see different accounts we are maintaining in the form of a ledger. So what is an account? An account is a summarized record of transactions affecting a person or a firm or income or expense or a gain or a losses. This is what is called account. Now listen. So next I am going to discuss how we are going to journalize the transactions. What is the rule for debit and credit? You can see that we are already studied now what is accounts and what is the rule for debit and credit. Now you look at, so what do you mean by journal and journalizing and ledger account and balancing and posting and what about trial balance? These are the points now what I am going to discuss. That is why I explained all these points. So once again, see, my today's section is what is journal and what is journal entry, what is journalizing, what is narration. On the basis of these accounting principles, now I am going to journalize the transactions. We are already studied. So you can see as per our double entry system, every debit there should be a corresponding credit. That all rules and different type of accounts we are already studied now. What is accounts, what are the different type of accounts, and what is the rules for debit and credit, that all we are studied. What is personal account? Once again, personal account rule is debit to the receiver and credit to the giver. And also real account, debit what comes in and credit what goes out. And nominal account, you know the rule is debit all expenses and credit all gains and losses. So these are the points we are already studied, and also simultaneously we have studied the modern concept, asset account, capital account, liability account, expense account, and revenue account. Now on the basis of this, now we can journalize the transactions. So please once again see what is journal. You tell me what is journal. You heard about the word journal, journal entry and journalizing. So what do you mean by journal? My point is, what do you mean by journal? Journal, journal entry, journalizing. These are the three terms so unanimously used by the businessman. You can see accountants. So you can see you are going for an accountant job, you are going for accounts manager job, you can see they are all doing the same work. Even you are doing a computer work, but manually you should understand what is the meaning of journal. What is journal? What is a journal entry? What is journalizing? You can see journal means debiting one account and crediting another account done through a book is called journal. See once again, debiting one account and crediting another account done through a book is called journal. So you can see journal It is like a book. There we are debiting one account and crediting another account. Done through a book is called journal. Then again next point, what is journal entry? Every entry which is made in the journal is known as journal entry. Then third point, what is journalizing? The process of recording the transactions through the journal is known as journalizing. I think it is clear. Now what I said, unanimously we all people are using these terms: journal, journalizing, journal entry. So in my first class what I said, bookkeeping, accountancy and auditing. These are the three terms unanimously used by the businessman. The same point I am repeating here also: journal, journal entry and journalizing. These are the three terms we are using. What is journal? Journal means debiting one account and crediting another account done through a book is called journal. Then second point, journal entry. Every entry which is made in the journal is known as journal entry. And journalizing means the process of recording the transactions through the journal is known as journalizing. You can see, I think it is clear. So these are the three terms we are using. Then what is the format of journal? Though you look at the monitor, I had given lot of examples. So suppose you are getting a transaction, how you are debiting and crediting. You see, first example is, we are already studied now principles, the traditional concept we have studied and also the modern concept we have studied. On the basis of this, look at all these transactions. You know, transaction means any action of a businessman involving the transfer of money or money's worth from one person to another person. So we are going to journalize the following transactions. So look at the monitor. Kamal started business with cash. You just apply my principles. Kamal started business with cash. You can see that in this particular transaction, so there are two accounts are there. Kamal started business with the cash in the form of a capital. In the business, what is coming? The money is coming in the form of a capital. So your entry will be, so cash account debtor to capital accounts. You can see the method of journalizing is cash account debtor to capital account. So I am writing here, so cash account debtor to capital accounts. Cash account debtor to capital account. So here which formula we are applying, that is the point. See, as per our traditional concept and also as per our modern concept you can apply. In business what is coming in? So the business cash is coming in. So cash is pertaining to real account. So debit what comes in. So that is why I am applying what? Cash account is debited. As per my traditional concept and as per modern concept, now I am proving my formula is absolutely correct. So you can see the cash account is a real account, debit what comes in. In as per our first journal entry, what is coming into the business? The cash is coming into the business. And the second point, you can see as per our modern concept, the cash account is an asset. Asset account is increasing. If the assets are increasing, what is my formula? So we are debiting. If the assets are increasing, we are debiting. So traditional concept as well as modern concept, now we can prove this particular transaction, that is Kamal started business with the cash, that is 1 lakh. So journal entry is cash account debtor to capital accounts. You can see that after passing this entry, so listen, cash account debtor to capital, one account we are debiting and another account we are crediting. Cash account is debited and capital account is credited. So we are applying the modern concept. So assets are increasing, that is why cash account is debited, and capital is, you know that it is a liability. Liability also increasing, that we are putting in the credit side. That is our role. If the capital or the liability is increasing, we are putting in the credit side. So your answer is cash account debtor to capital account. Then here one more point should be noted. So along with the transaction, we are writing one more point, that is what is called, you know that, narration. So what do you mean by narration? So here after writing the transaction, in bracket we are writing particular, you know, narration is the short description of the transactions. So what is narration? Narration is the short description of the transaction and it is compulsory. So don't forget this particular point. Narration is the short description of the transaction and it is compulsory. So narration is always starting with a keyword, that is being. Narration is always starting with a keyword is known as being. Being the company started or invested business in the form of a cash or in the form of a capital. And also now it is a time for break. Have a short break. So don't change your channel, and also please stay with me, and we want to discuss many points. So have a short break.